Can this bounce be believed, and how do the shifting political probabilities play into this equation, if at all? Let's bring in Chris Ferrone of Strategas, Cameron Dawson of New Edge Wealth, and Jordan Jackson of JPMorgan Asset Management. Welcome to you all. Chris, this market kind of wants to keep people off balance. I mean, you had this complete whipsaw, quicksilver rotations last week, everyone declaring maybe this is a enduring shift. Now we're backsliding on it a little bit. What are you reading in, let's say, the market behavior of the last 8 sessions? And can we extrapolate from there?
I think the market behavior of the last 5, 6, 7 days is what we should be focusing on, not necessarily today. Now, I'm somewhat happy to see that the strength in tech and semis today is not at the expense of regional banks or industrials or other kind of the value or small cap names. It's been broad, it's been inclusive, and we're talking about a week where, last week you had 50% of the S&P make a one-month high, you had 75% of the Russell 2000 do the same. I mean, that is really, really impressive when you look at the history of that data. And what's the message? It means the trend is still very much fully intact here. I recognize there's some seasonal issues that approach us here in an election year into August and September. But I think if you got a correction here, it would be modest, it would be rotational. And I think the leadership message from the last 2 weeks should be heeded.
So the leadership message of the last 2 weeks is what, though? Because what we did get is a routine-looking pullback in the S&P 500 of 3%, 5% in the NASDAQ 100, this huge burst off a completely washed-out level from small caps and other things. So what are we to take from that in terms of what might outperform from here and participate?
We have this saying in our work, and when you're in an uptrend, be patient, not clever, right? And when you look at the last 4 or 5 months, whether it's financials or small caps or some industrials, their only sin was chopping for 4 or 5 months. It got resolved in the direction of the underlying trend. I think the breakout in financials in particular, and not just banks, capital markets, even the insurance names have gotten back in the fold. I think that is your leadership. This move back to the financials has been really, really impressive here.
So, Cameron, it seems as if this burst in market breadth and some of the more cyclical tone of the leadership last week, at least the perception is, and what from Chris is saying, it sort of buys the market a little bit of a technical cushion, perhaps. I guess, what would you read out of it in terms of what it says about what earnings are going to be and whether the macro message is one that you would buy into?
I think Chris's point about financials is interesting because that's where we've seen the most earnings revisions higher in this earnings season. They contributed the most to the upside in earnings for the overall S&P. So we think this market will still be driven by earnings revisions, and that likely colors things like the growth versus value trade. Growth earnings continue to move higher, really boosted by tech. Value in earnings continue to drift lower. If that starts to change, maybe you see a durable leadership change. But if it doesn't, it means more of the same kind of narrow leadership that we've been having.
The other part of it is all this started up as we got to the finish of the second quarter, a little past, let's say the first 2 weeks of July. We're at a high. Sentiment and positioning is looking like it's getting a little bit out on a limb. So, Cameron, do you think that this sort of rotation, this little bumpy rotation, has taken care of some of that?
I don't think quite yet. It's been so slight, and you didn't even test the 50-day moving average for the S&P 500. If you look at those sentiment and positioning measures, they are stretched. They're not quite as extreme as they were in times like early 2018 or late 2021. So that would suggest that maybe there is more juice to pull people off the sidelines and get them into the market. And so what we put those risks into the camp of being not Tom Clancy risk, where they're not a clear and present danger, but we can't ignore them because eventually, if you see earnings revisions start to move lower, they'll run into the fact that the market is expensive, positioning is stretched, and eventually that could cause some volatility.
Jordan, weigh in here in terms of, whether the action recently and even today has revealed anything to you about what you expect the market. Can we escape a further pullback and proper correction? And how do you think earnings are going to interact with all this?
Well, as you highlighted, right, this rotation really began after the June CPI print a couple of weeks into the month of July. And really what it continues to suggest is that growth is cooling but not freezing over, and the disinflationary trend is back on track. And I think that's what's really allowed sort of the small cap rotation to play out. I'm sort of fading kind of that small cap play. I think in an environment in which, the bulk of the index is still, unprofitable, looking at the Russell 2000 on a trailing 12-month basis, the Fed's going to be cutting interest rates very gradually. And again, growth is cooling, not re-accelerating here. I'd probably be a bigger believer in sort of this rotation into the rest of the large cap sectors and taking some of the chips off the table from your big winners in tech and dispersing that to some of the more unloved sectors that have underperformed as of late. And this really feeds through into the narrative of earnings recovery coming out of the other sectors of the market outside of tech. You're talking about potentially by the fourth quarter of this year, financials posting 40% year-over-year earnings growth. Now, some of that is base effects from a weak fourth quarter of last year, but some of that is genuine, net interest margin, net interest income beginning to inflect positive, and consumers hanging in there. So that's sort of how I'm thinking about this rotation as of late.